Markets hit fresh new lows on Friday, and it's definitely got a lot of investors spooked about how low they think things could go next. That's why I've invited our two true options masters, Mike Carr, CMT, CFT, and Chad Shoup, CMT, into the room with me today to talk about exactly what they see. They're going to tell you why you should expect volatility to persist over the month ahead, and they're going to give you some actionable trade ideas, both to the upside and the downside, that you can bet on over the next month. So with that said, let's get into our monthly market outlook for May 2022. Hello and welcome to our May 2022 edition of True Options Masters Monthly Market Outlook. Indexes hit new lows on Friday. It's got a lot of investors very concerned. That's why I've got both of our True Options Masters here in the room with us today to tell us exactly what's going on and the opportunities they see. Is it a bear market? Is this the bottom? Well, hopefully you'll walk away with this from ideas on how you can not just protect yourself in the coming weeks, but maybe also some ways that you can profit. There's a lot of volatility going on right now, and True Options Masters understand volatility is an options trader's best friend. So let's get into it. Chad, I know you're going to look at a couple of ideas today, one that's bullish and one that's bearish, because we are kind of at that inflection point right now. Mike, what are you seeing?
Yeah, I'm seeing the broad market showing a lot of signs of weakness, and I don't think we're out of the woods yet. I think we could go lower from here.
So we're recording this on Tuesday, and something I was noticing on Monday were a lot of the beaten down growth stocks, they were rallying 5–10%, whereas stocks like Apple and Amazon were showing some weakness. I think both ended the day up a little bit, but it kind of seems like they were the safety nets before, and now people are starting to get a little bit skeptical of them. Of course, Amazon crashed, almost 15% on Friday. Apple got carried down with it, even though the earnings report was okay, I would say. So I think I'm definitely seeing the same thing here as you.
Yeah, I think especially in those big tech names, if you look at the volume weighted average price, that'll give you a proxy for what the average investor paid to get into a position. And if you go way back to March 2020, what you find is last week, we broke below the VWAP on those big tech names. So this means the average investor who entered the market since March 2020, the stimulus check investors, so to speak, now have losses. And I don't think they all were prepared for that. I think a lot of them thought you just buy, you hold on for dear life, and you just retire when you're 25 with $1 billion. And they're learning now that markets go down as well as up. Their accounts are in the red. And I think you're going to see another wave of selling as those folks face reality.
Okay, so what I'm seeing is, we saw stocks like Facebook and Netflix, some of these FANG stocks, and they go down at first and people are like, oh, it's a bottom. Let's just call bottom. Let's buy some call options here. And it turns out they go way, way, way lower. And now they're seeing the same thing in stocks like Amazon and Google. They've hit fresh new lows. Apple is still above its March lows, but they're seeing that and they're asking themselves, how much longer do I want to hold on? How much do I really want to tempt fate? So I think that that's becoming more and more clear. Okay, Michael, let me go ahead and turn it over to you. Go ahead and pull up your screen. I know you've got some macro outlook stuff to show us, and I'm sure you're going to explain exactly why you see more selling ahead.
Yeah, so let's start with the chart of SPY, the S&P 500. And I want to start here looking, well, the blue line is the 200-day moving average, and we're now well below that. This is the very definition of a bear market. So we can argue with the market all we want, but the trend is down for now. What really has me concerned is these red lines. So we took here, what I did was I drew from the January high down to the February low. And if you recall, that was a scary market. And then these are the Fibonacci retracements. The market started rallying. We blew through the 38.2, through the 50%. We even crossed above the 61.8% retracement. According to Dow theory, according to Fibonacci theory, for the last 150 years, once you break above that 60% level, you're in a new bullish up move. Well, we failed. We now have a head fake. And we saw the selling was pretty vicious as others saw this. I know volatility is an option trader's best friend, but options on SPY, short-term options, are now priced at about 2% of the principal in some cases, and it's really hard to make money when you're paying up that much for the short-term options. So, we're looking for opportunities here, but we need a reasonably priced option to benefit from that. Selling accelerated again. Months ago, I talked about a price target based on the 200-day moving average. We went above it. This was the max excursion above the moving average. So we look for an equal move to the downside. That move came, it coincided with two quick reversals, a third time when price struggled but broke back above it. We've now broken down. This support has now held 3 times and failed. So we expect a fairly quick move to the downside now.
Now, explain why you started your measuring stick there in November.
So what I did was I looked at the amount the S&P closed above its 200-day moving average.
Okay.
And this is the highest point. So the highest point shows where the trend got carried away, average at that point. So emotions were not as stretched. When you get it too far above or below the moving average, you are in an area where emotions have taken over. And this was an emotionally exuberant time to the upside. So we expect an equal and opposite reaction to the downside. And we talked about this one way back earlier in the year. We showed this line and said, this is a line to watch. And now it's a line that's broken.
Yeah.
So let's jump over small caps. Same technique. We have now broken down massively. We broke below that initial projection, and our next projection is well below where we are now. So negative chart there, and then QQQ, just breaking down now out of what looks to be just a massive, this could be called a massive complex head and shoulders top pattern. It's the kind of pattern that attracts attention. And what we see is the uptrend, definitely the head here. It's not a clean head. It's, 4 different points on it. So that makes it a complex pattern. Looking down, we see that the shoulders also a little bit rounded. And now we have a break of a clear support level projecting way down here. Just a significant, potentially 25% decline in those big tech names that you were just mentioning.
Which index do you think people are following the most right now? Do you think that they're following the NASDAQ more than the S&P 500?
Yeah, I think their accounts are following the NASDAQ. I think they're looking at the S&P 500 and wondering why they're underperforming it in their account. And that's because we have so many new investors who don't understand they have exposure to QQQ, not SPY.
Right. And it does look like QQQ didn't quite recover as nicely as SPY, just taking a quick look at it. And that's why I'm thinking that maybe I think people are just focusing on all these tech names that they see getting butchered. And it seems to be that seems to be what's driving all the selling. So maybe that's why the reversal in SPY happened.
I think so. The tech names account for a large proportion of the S&P 500.
Gotcha. Mike, do you have anything else to show us today?
I don't. Thank you.
Okay, so Chad, I asked you to pull up something. Maybe we could take a look at the market leaders, Microsoft, Google, Amazon, and Apple, because a lot of attention seems to be going to those stocks right now. As mentioned, Amazon had its worst day in really, what was it, 2 decades just the other day. So I think people were looking at these for safety. And now that I'm looking at your chart, it looks like a lot of them are in the lagging.
Yeah,
Once you tell us what you're seeing here, Chad.
they've been beaten down. I mean, keep in mind, this is a daily chart. So with the relative rotation graph, it's very volatile. It's short term. These quick moves that tend to play out in just a matter of weeks. So we're not talking about, months for these things to move. We know that the market was weak in the last month. So we saw a lot of these pull back. Microsoft had a good move on earnings and held steady from there. So we saw that to turn around before some of these other ones. And at the center here, it's just the S&P 500. So we're comparing these to the S&P 500 still, just because that is, like you said, that's what a lot of the people look at. That's what they are comparing their stocks to. So the QQQs are getting hit a little bit harder, but we're just comparing these to the S&P 500. And then our 4 quadrants for this relative rotation graph real quick. Leadings in the top right, that's when they're outperforming the market. Then when that slows down, they start to fall into the weakening quadrant. And then they lag the market down here in the bottom left. So that's where we see most of these stocks sitting today: Apple, Amazon, Google, with Microsoft the only one that's up in this improving quadrant and showing some strength here over the next couple of days. And the way that I look at this, a lot of times, especially in the short term, like Apple's starting to turn higher here. So you would look for this to push higher over the next week or two for a stock like Apple. Google's trying to do the same thing, but Amazon's heading lower, and Microsoft's run here in the short term is probably about to give way for some weakness here once it gets into that leading quadrant over the next several days.
And of course, these things can all just turn on a dime, and these stocks all have a roughly equal influence over the market. So with Amazon in free fall and Google just sort of drifting out into space there, there's no guarantee that Apple and Microsoft will continue to head north.
Oh yeah, they'll change pretty quick. But yeah, Amazon's chart there was a lot weaker than when you look at like Microsoft. They've been at least holding this bottom range a little bit more instead of just in free fall, and that's what we're seeing here kind of play out. But then if we zoom out to like the weekly chart, it looks even more bearish here. Amazon's turned and headed lower, and this is weekly. So now we are talking about over the next couple of months probably that it takes for these to play out. And then Apple, they're over here in the weakening quadrant, but until they actually make this turn to the upside, this thing could drift sideways or lower and continue to show a lot of weakness. The only one that's turned up is Microsoft. So that one has turned up here on the weekly, and it was turned up on a daily. So Microsoft's not looking too bad out of these, the big ones. And then Google is the one that's heading to the south here. They're jumbled together, so it's a little hard to see. But that's our takeaway here from looking at these big stocks that are definitely on the move. And I mean, I think, Chris, you nailed it kind of at the beginning. I expect more volatility. There is some weakness in the market, but at the end of the day, I expect to continue to see these big moves. I don't think we're out of the woods yet for just these, big 10% days and large companies like we're seeing in Microsoft and Amazon for now.
Well, I asked you to pull these stocks up because I think that it's right now, so far this year, it's more important to pay attention to these 4 stocks than ever in the last few months, because they were holding up extremely well. And now that we're starting to see some of them break down, I think people are really looking to the market leaders now for signs of what's going to happen next. I personally don't really trade Amazon and Google too much because their premiums are just so expensive, but Microsoft and Apple, they have lower stock prices and therefore also lower options premium. So I have been trading those. Full disclosure, I own some puts on Microsoft right now, just because I personally think the action we're seeing in Google and Amazon is probably going to carry everything lower, just like Amazon did on Friday. But that's just me.
Yeah. I mean, it's got room to break down still. That's the thing with the stocks that are holding up. There's kind of the potential for, once the weakness really takes over, they have more room to fall. And I mean, what we're going to look at today, pull up the sectors.
Right. I know you've got 2 sectors you want to look at today, Chad. One bullish, one bearish. So you're kind of hedging your bets a little bit. Yeah.
And we can see it here on the chart with all the sectors in the S&P 500, because there is a lot of weakness. You see a lot of them are making this rotation, headed back down the weakening or in the lagging. The only one heading higher at the moment is technology. But, that's can be short-lived by the time, because technically it turned up, several weeks ago several days ago at the end of April. But since we're only talking a couple of weeks, then this has a shorter run before, in 5 or 6 days, it'll expect to peak and turn lower. So the 2 sectors that I wanted to look at today is way out here. The further away, you expect more volatility. So this is the consumer staples sector. And this has been one of those safe haven plays that's held up nicely. You can see on the sector, it's been trending higher. I mean, it dipped on Friday, but overall, it's not seeing that much weakness. So here on the daily relative rotation graph, we're looking for a short-term pullback in the sector, just expected to trend back down to maybe a support just over the next couple of weeks, seeing some weakness in the consumer staples, and have a couple stocks that you can keep an eye on. And then we're going to take the exact opposite, the consumer discretionary stocks that are very consumer driven. You know, depends on how much excess spending that we can do as consumers that'll help drive these types of companies. And the chart looks a lot weaker, but since it is down here, holding near a support level, the previous lows basically, and if it could just get a little rally out of this is what we're looking for with this one, holding this level for now and rallying over the next week or two in the month of May to give us this little bounce.
With it pointing down into the red lagging sector, what makes you think that it could turn?
Well, these are very short-term kind of, the daily swings. So basically, I do want to have a bullish trade out there right now because of the way we just had a sharp drop in the market. So I'm looking for, again, it could even finish the month in a red, but at least a bounce here over the next couple of weeks is a significant possibility. And these are the stocks that you'd want to take a look at because they should be the first to kind of take a bounce.
And it does look like at least a few days ago, it was starting to point up into the green. So maybe we'll see it turn back. Yeah.
I mean, it could. And then we're taking the opposite side of that. So if there is more weakness in the market, we're taking a high flying staple sector that's been just showing a lot of strength and seeing that sector kind of get the wind taken out of it if we see more weakness in the markets.
Sounds like a good bet. Go ahead and show us your stocks.
Yeah, I've just got two stocks that we're going to take a look at. So for consumer staples, can zoom out. And I mean, I don't like to fight strength too much. So we do have Kimberly-Clark up here at the top, and it's holding around, previous highs, but it just had a big gap. So if you follow my earnings strategy and quick hit profits, big gaps tend to lead way to even more gains. So I'm not too worried about trading that one to the short side. The one that I like to the short side is going to be Kraft Heinz. It's running higher, but it didn't go into big gaps. Similar spot. So if we do see weakness, this stock's going to get hit pretty hard. So Kraft Heinz looking for just a pullback here over the next couple of weeks to come back down into this level of support. Same thing we were looking at with the overall staples sector. And then the other one is Stars, Constellation Brands, STZ. So this it's already down into the weakening quadrant. So we are already seeing this pullback play out to an extent. Just looking for it to continue to decline over the next couple of weeks. So those are the two bearish trades that you can have on your radar here, just over the next couple of weeks in the month of May. If we see more weakness, these stocks have been strong. So if we get another sell-off in the market, they're going to get hit pretty hard, I think. And then on the consumer discretionary side, we have two stocks that we're going to take a look at that to be bullish. Now we have Etsy. I mean, we have a lot of weakness again. They were making the turns higher, but now we're expecting to see a lot of weakness in all these stocks that are over here to the top right. So we're going to focus on the ones down here to the bottom left, looking for that bounce. Etsy's too far out on the side for me. And when you pull up the chart, you can see that it's just been sliding lower and hasn't really given you anything to look for a sign of support or any reason for it to bounce. Now, these are the types of stocks that can, jump 20 or 30% in a single day. So they have the potential to jump. And I mean, if we were going to look at it, now would be the time, but it's not, this thing could jump any day. It's just a big risk, much more of a risk with a stock like that. So the ones that I really like is Tractor Supply Co. So this one's holding into this support. It's already had the pullback that we've been seeing in the market. And now we're just looking for the support to hold and get a nice little bump here and hold into this uptrend for the stock. It does have a resistance level, but it's up around $240 a share where it had the two previous peaks. So it's down close to, 205 today. If it gets a rally out of that, it's got a nice room for it to run here in the month of May. And then the other stock is Tesla. So Tesla's had a lot of weakness, been very volatile stock, but it's ultimately holding up here, and it could create a wedge pattern because the tops are getting lower, but the lows are still trending to the upside if this holds as a bottom in the short term. So we're looking for Tesla to bounce and Tractor Supply Co to bounce. Again, Amazon, we're not going to look for that one to bounce yet because it's headed to the downside here on this relative rotation graph. So those are the two bullish stocks that I have for this month.
Okay. So Tractor Supply and Tesla to the upside, and Stars and Kraft Heinz to the downside.
Yeah, that's Constellation Brands, but the STZ always throws me off. But yes, STZ is the ticker.
Got it. Constellation Brands.
Yeah, adult beverage maker.
Okay. All right, well, gentlemen, do you have any final thoughts for today before we sign off this month's monthly market outlook?
I mean,
We're in for an exciting month.
yeah, that's what I got. I expect more volatility, some more big market moves, and a bunch of chances to make a lot of money.
I completely agree. I have just accepted in the last few weeks that maybe it's just time to accept what's happening, maybe not fight against it. I think we have to do whatever we need to do to keep cool heads right now. And at the end of the day, if this is a bear market and stocks go lower, that can be a great thing, because then you have an opportunity to buy amazing stocks that are on sale. So what my personal goal is right now is I am trying to build up a strong cash position. I'm trying to make obvious trades on both calls and puts that I see right now so that I can build up a strong cash position. So when it does look like this stuff is bottoming out, I can buy the best stocks in the world on the cheap. So I'm very optimistic. It is very exciting. And I would just, a message maybe to anybody watching this is, if you've locked yourself into a position where you're only betting on stocks going up or only betting on stocks going down, it's really important to pay attention to what our true options masters are saying, because they can show you how to move with the market and show you exactly what's going to be happening next. Right now, it's very hard to predict what's going to happen more than a week out. And that's why we've seen some very good success in both Mike and Chad's shortest term trading strategies this year. So with that said, we'll go ahead and sign off. We'll be back around this time next month, and we'll see what happens.